Long after the almost 3 years long bearish market just before the start of the bull cycle from back in December 2020, cryptocurrency investors have been stuck with a dilemma of investing in these markets, given the advent of scams and some fraudulent crypto platforms, with use cases that were, if I must be honest with you, obviously by the edges. I'm talking about projects like Sparkster and the likes that were seemingly into creating a blockchain platform that could allow non-software developers to build software programs through solving a drag-and-drop puzzle. It's pretty ridiculous. Skepticism is fueled by the fact that many crypto traders lost a good fortune due to the bear market. At the same time, the other half of them lost their lots to these otherwise scam projects. And right now, only a handful of these traders and investors are willing to invest in these coins. Whereas those who do engage with them eventually do so with a mindset that they are investing in shitcoins. Hence, they're always on the clock for when to take out their money before the crypto dips into the ashes forever. When it comes to XRP, could we see the price of this digital asset reaching $2,500 in the long term? If Bitcoin could do it, if Ethereum could do it, why not XRP? Welcome back to Make Money Online. If you haven't already, consider hitting that subscribe button and turning on post notifications. We also have a free Discord group where we share daily signals, and now you can also support us on Patreon. We have a special offer for our first 100 members, only $9.99 for our VIP Discord channels, where we share much more in-depth analysis and even one-on-one sessions. We also have a special discount offer on Binance. You'll get 5% off every trade you make on the platform if you sign up with our promo link in the description. Also in the description are links to get your hands on GSX, the gold-backed currency. This growth coin is designed to withstand market volatility, and it's backed by real gold and other mineral resources. Be sure to check out the links in the video description. Heading on to the case of the months-long litigation between Ripple and the SEC, considering the Commission's failure to adequately plead knowledge or recklessness on the part of the individual defendants, even after multiple tries, is enough reason for the judge to have a reconsideration on this case. The Ripple vs. SEC lawsuit has taken an unexpected turn, and this time, one of the regulator's former officials, in the person of William Hinman, the erstwhile director, Division of Corporate Finance, might just be turning the case around for the better. Following a recent publication by Finance Feeds, it was discovered that the significance of William Hinman's deposition to the SEC versus Ripple lawsuit is yet to be determined, with a more than likely possibility that the testimony will go public in waves. It would eventually become filed in its entirety at some point, with some exceptions under seal. Nonetheless, the role of the former SEC director who was in charge of the Division of Corporation Finance and the Commission's digital asset guidance has continued to draw the attention of various key players within the industry. More on the market attention towards this testimony is also due to the remarks made by William Hinman at the Yahoo Finance All Markets Summit. The SEC's Division of Corporation Finance is the arm of the agency that solely seeks to ensure that investors are provided with adequate information before investing in any of such digital assets. This information provided is there to aid investors in making informed investment decisions, both when a company initially offers its tokens for sale as securities to the general public and on an ongoing basis as it continues to give information to the marketplace. In a nutshell, the division is slated to facilitate capital formation, maintain fair, orderly, and efficient markets while protecting investors within the jurisdictions of the United States financial markets. The former head of corporate affairs at the SEC publicly classified Ether within the confines of a digital currency rather than a security. If we're to scroll down a little bit further on this piece published by the SEC following the events from that summit back in 2018, we will see that the former chief had said, putting aside the fundraising that accompanied the creation of Ether, based on my understanding of the present state of Ether, the Ethereum network, and its decentralized structure, current offers and sales of Ether are not securities transactions. Furthermore, on that same piece, William Hinman goes on to add that over time, there may be other sufficiently decentralized networks and systems where regulating the tokens or coins that function on them as securities may not be required. And of course, there will continue to be systems that rely on central actors. However, the SEC, during his regime and tenure of John Clayton as the SEC's chair, went ahead to sue the Ripple company, which, as described in his terms, is another sufficiently decentralized network. Hence needs no regulation of its tokens given they function in semblance to other cryptocurrencies in terms of fundraising techniques, such as Ethereum. Now you see why the deposition of the former SEC director, which took place on Tuesday, July 17th, was essential. Yet, since it was not a public hearing, it couldn't be accessed by the public as of right now. And like a few other closed-door hearings in this lawsuit, which are being prohibited by law to be disclosed to the outcome of the hearing to the general public, we would have to wait for that information to materialize as events unfold. Otherwise, any other trials towards this would only seem like we're playing to gather the information we can't find. This was clarified following a post on Twitter by one of our favorite cryptocurrency and XRP lawyers, attorney Jeremy Hogan, who's taken the time to highlight the critical components of the court session. Similarly, Ripple has in another filing urged the court to take into account statements made by one of the 5 commissioners, Hester Peirce, as supplemental support for its motion to dismiss the case in its entirety. The crypto mom, as Hester Peirce is popularly regarded within the crypto community in the US, put up a solution in a recent comment regarding the lack of regulatory clarity for crypto companies by the SEC, a statement that Ripple believes builds on its lack of fair notice defense. As recommended by Commissioner Peirce, a better approach to that would be to see the financial regulators, and not just the SEC, including FinCEN, the FRB, the CFTC, enacting a regulatory framework under which every token offering must satisfy before they could kickstart. More like a set of tailored protections for the everyday crypto investor within the US. With or without a victory in the SEC lawsuit, XRP will still hit more extraordinary highs. This is undisputed, as this digital asset has already made its mark within the spheres of cryptocurrencies and financial technology. During the summer of last year, precisely in August, the IMF released a paper under the label of the United States Financial Sector Assessment Program, titled Technical Note on Supervision of Financial Market Infrastructures, Resilience of Central Counterparties, and Innovative Technologies. If we're to scroll down to section 104, take a quick look at what's on there. According to this section, keep in mind this was in August, almost a year from now, the IMF is talking about a network-based application service provider such as Ripplenet. And it says here, also, network or network-based application service providers such as Ripplenet are not subject to specific regulatory requirements and do not need a specific license. On this one, the International Monetary Fund cited the use of the Ripplenet platform by MoneyGram. This partnership was severed due to the lawsuit filed against Ripple by the SEC. Conventionally, these international corporations do not always mention this, but it doesn't mean they don't exist. We're talking about a cross-border payment platform like Ripplenet, making these payments faster, cheaper, and seamless. With a market share of over 2% of the overall cryptocurrency market capitalization at a price of less than $1 and sitting at the 6th spot across the board, shows how much potential XRP still has to grow towards greater heights. And yes, XRP can and will explode to exponential gains. First, XRP would have to go over the $1 mark, reaching the 2 to 3 figures price tag, and then to $1,000, $5,000, and $10,000 per XRP, just as predicted by famous billionaire Steve Wynn. This is why we can confidently ascertain that investing in XRP, nonetheless a very volatile coin at this point, is not in any way a bad idea when we look at it from the perspective of a continuous and long-term interest rate. Thank you for watching today's video. If you enjoyed it, make sure you subscribe if you haven't already, and turn on bell notifications. Don't forget to check out the links in our video description for our Patreon and Discord group, and make sure you check out the GSX competition for your chance to win big. Links are below, and if you have any questions, drop us a comment. See you next time.